Harvey Norman have put out a sales update this morning, just tracking the first couple of months of the new financial year, FY 2021, and it's really been a good start to the year for Harvey Norman. In their update this morning, they say aggregated sales revenue from the 1st of July to September 17 up 30.6%. And comparable store sales over that same period up 30.3%. So a massive increase in sales here. Looking across the different markets that Harvey Norman does have its stores, Australia was the strongest performer. Sales in Australia, comparable franchisee sales up 34.5%. Ireland 55%. Slovenia, Croatia 27%. Northern Ireland sales up almost 24%. The company also had some sales growth in New Zealand, but did see sales decline over that period in both Singapore and Malaysia. But overall, very strong sales figures for Harvey Norman. They've also taken an unusual step. They don't do this very often, to release unaudited profit before tax figures. This is for the period July 1 to August 31. Their unaudited profit before tax was up 185.6%. So they're obviously selling a lot of products in these first few months of the new financial year. Their unaudited profit figure was $178.1 million, up from the prior corresponding period, which was $62.3 million. So great start to the financial year for Harvey Norman. Investors like the result too. The share price is up about 2.3% today. It's one of the better performers on the market. As for the stock market, Tom, it is down a bit this morning, or this afternoon, sorry. It's down about 0.6%.
And Ed, meanwhile, Commonwealth Bank economists have upgraded their GDP forecast for the third quarter.
They have, Tom, and that's all due to the better-than-expected unemployment numbers last week for the month of August. There was 111,000 jobs created during the month. So Commonwealth Bank have looked at this and said, you know what, the economy is actually doing better than we thought. Previously, for the third quarter, they were expecting GDP to be flat, so showing 0% of growth. They've now upgraded that. They expect the GDP will actually grow by 2% in the third quarter. I guess what that means is, according to CBA at least, the recession Australia's in will only last for 6 months rather than 9 months. A lot of economists had predicted the third quarter to be either flat or negative growth. It'll be interesting to see over the next couple of weeks whether other economists begin to upgrade their forecast as well. CBA are predicting for the year of 2020 as a whole, GDP will contract by 3.3% now. Their previous estimation was 4.3% contraction. Then they expect next year GDP growth of 2.5% in 2021 and the unemployment rate to be 6.5% by the end of next year, Tom.
Ed Boyd, thank you.